Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be on again, Jim.
You were recently in the western U.S., as you said, kicking some rocks around. What's happening on the ground when it comes to the mining industry and exploration?
Thank you for the question, and I appreciate you not asking me to tip off our listeners out there before I get a chance to file my field report with my readers. I am working on that. But I saw 9 different companies, so it's a pretty massive work, and I hope to have that to my readers. I will have it to my readers in Monday's edition of the Independent Speculator. But what I can share and do think is significant for everybody, subscribers or not, is sort of the reality on the ground I found is quite different from what we're hearing on the mean streets of Vancouver and Toronto, you know, Bay Street and Pender and Howe there. That if you go to the corporate headquarters, the markets are terrible. Nobody wants to hear about metals and mining. Bitcoin is eating gold's lunch, blah, blah, blah. It just seems so negative. Market sentiment with gold, you know, above 1,300 again. It feels like, you know, gold at 300 or something. It's amazing how negative investor sentiment and I should say C-suite sentiment is in this space. But on the ground, and I was in Mexico, Arizona, Nevada, Wyoming, Colorado, I think that's it. Anyways, I really hit the ground running and covered a lot of ground there, and it's busy. When you're driving around Nevada in particular, you see the trucks for the geophysics companies, the drillers, you know, the big players, you know, Barrick and Newmont with their consolidation there. It's going gangbusters. But you also talk to the exploration companies, and it's, you know, you stand in line to get a driller, and if you want your assays, you know, you got to wait, and if you want to rush them, you got to pay extra. It's interesting to me that while on one level it seems like mining and metals is just terrible, nobody wants to hear about it, but on the ground things are really booming, at least in the U.S. West, and I think that's interesting. I can't prove it mathematically as a forward indicator, but it's clear that there are supply crunches coming in some key metals like copper. There are very important metals to the new energy paradigm that are in short supply, and you know, I think there's a good chance that gold is actually going to break out of the 6-year pattern it's been held in for all this time. And it certainly seems like the companies that have the goods on the ground are making progress. They're able to raise money, they're able to explore, and they're keeping all those service and support companies really busy.
Are they stockpiling their gold, anticipating a higher price?
I'm not hesitating because I don't have an idea, but I'm trying to phrase this politely. Let me go ahead on here. There is something to the land bank play, to buying resources. It doesn't have to be gold. It can be any resource in the ground when it's very cheap or even uneconomic. When nobody wants it, you pick things up for pennies on the dollar and just hold them until prices go up. Rick Rule famously calls that the optionality play. The land bank play is another way to call it. And that is a reasonable business plan. That does work over time. Unfortunately, that time can be years, and you never really know when the outcome is. So if you have a shorter investment horizon, or like me, you're a poor, long-suffering newsletter writer, you know, with monthly readers who want to know what have you done for them lately. Actually, my current readers are much better than that. But it's often the curse where you need to have a win. You need it now. You need to have a great track record this year because people aren't patient. So that makes the land banks kind of risky, I think, in the newsletter space. But, you know, it's a fine optionality for long-viewed investors who can just ride out the storms. But I don't think many companies are actually doing that as a strategy now. Certainly not the exploration company. They, building a mine and running a mine is a completely different thing from exploration. And as long as you think your deposit's wide open, you keep exploring. There's no reason to shift to a different business plan when the market will reward you for exploration success. And despite some of the companies that have been becoming, it's not like back in 20 years ago when they became .coms, but we're seeing that. We're seeing miners become Bitcoin companies or marijuana companies and so on. In my mind, this is actually a contrarian, very bullish indicator. But nobody's stockpiling gold as such. Nobody's producing it and sticking it in the warehouse for waiting for higher sales later. The uranium producers, I would say, are the closest to that in today's metal markets. There are companies that are actually doing that. They're stockpiling. They're even buying on the open market because they can buy on the open market for cheaper than it costs them to produce. And then they can sell that into long-term contracts they have at higher prices and make money. Which leads into another thing, why would you do that? Why would you produce it all if you could buy it on the open market for less? Well, some operations are really hard to shut down and start up again. Particularly the in situ operations, it's important to keep the fluids going there and not get the channels underground gummed up. So there are high costs to shutting some operations down, and you don't do it if you can at all avoid it.
Is money that would be normally invested in gold and gold mining going into cryptocurrencies instead?
I would say yes and no. That's certainly something you hear. And the way I think of it is that the kind of highly volatile, liquid, speculative capital that chases after a flavor of the day, and that doesn't just mean a metal or mineral, but any flavor of the day in the market. Clearly, the hot trends attract that kind of capital, and that has drained capital from the resource sector when it was the hot flavor of the day. And even for mainstream investors, there are times like 2009 and 10, after the crash, when the metals and mining space was really booming and commodities prices were soaring. There were times when mainstream investors saw gold and copper and other resources as the flavor of the day. Now that has changed. So that highly fluid money is clearly flowing elsewhere. But that doesn't mean that the typical gold investor is suddenly becoming a Bitcoin bug, or that the kind of money that has in funds or investment firms that specialize in the resource sector, it doesn't mean they're turning into pot companies, or they're going to stop funding mines and start funding, grow farms or something like that. I don't see that happening. And this is important, and actually this is a value to your listeners. If you think about what I'm saying, the smart money that understands the sector is still with it. The real projects of merit, the companies that actually have made a discovery that matters, or have a project that looks like it makes money, even at today's prices or lower prices, those guys are still able to raise money. And the smart money is flowing into those higher quality projects. So right now, these dismal, terrible, awful market conditions are actually making our job as speculators easier. You can see who's able to raise money. You can see who's got a project of merit that can attract capital, even when capital is, the squishier capital is fleeing elsewhere. So, it's the opposite of when the market is frothy and all the money is flowing in and all the stocks go up. All you need to do is have gold in the name of a company during a raging gold bull, and the stock will go up. Not so now, and that is a huge help to people who actually understand and have the guts to implement buy low, sell high.
We'll have more with Lobo Tiggre right after the break.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, is there, cynicism about the attacks on the oil tankers in the Middle East right now?
Sure. But, that's nothing new. There's cynicism all the time, and I have seen, false flag accusations. But since nobody's actually raised the flag on that one, it's a little bit early, I think, to say it's a false flag operation. The closest you could come is to say the U.S. did it, and it's trying to blame Iran to harm its enemy. I don't believe that. I think that's a bit hard to say. On the other hand, it's also hard for me to credit the U.S.'s claims that Iran is to blame. It seems, I haven't reviewed the data the intelligence officials have reviewed, obviously, but from what we get, what little description we get, it seems pretty circumstantial. Like the type of weapon used was the type that Iran would or could use. That doesn't mean that somebody else couldn't have bought such a weapon or used it, some other player. And if you ask, if this was a crime, we would ask, well, who benefits, right? Who killed Professor Plum in the study with a pipe, right? Who benefits? It's hard to see Iran benefiting. Okay, they may be mad about the sanctions, they may be, unhappy about the situation, but closing the Strait of Hormuz isn't going to help them either. That's just suicide. That doesn't help them. Let alone if they actually, clearly are blamed and they get caught red-handed. That really leads to open warfare in the Middle East. That doesn't benefit anybody. Well, maybe the new energy guys, but on the global stage, nobody really wants that to happen. Now, on the other hand, if you're, say, Saudi Arabia, and you see demand slacking due to this slowing global economy, due to the trade war tension, you're doing the glut, from the U.S. shale producers, and you've already cut production. You really don't want to cut it anymore because you've got a budget that's out of whack. What can you do? You really want higher prices, not lower production. You could, heat things up a little bit, not blow up ships entirely and block the strait, but harass some ships, damage some ships, slow down the flow of oil, scare people, raise oil prices, and that could benefit you. So I'm not picking on them. There are a number of players in the region that could potentially benefit. This is, I wouldn't call it speculation because I think of myself as a disciplined speculator, and I don't want the word slurred. I would say that's just wild guesses. Your guess is as good as mine, and we can guess all day about what might be happening. So let's set all that aside. What's not a guess, and what is really interesting to me, is that it's now a pattern. When this happened last month, 4 attacks in the space of a few hours earlier in May, it was just as alarming. But it was one-off. Nobody knew what would happen, whether, it could have been dissidents in Saudi Arabia, given the Saudi targets involved and so on. It could have been anything, and it was one-off. Okay, fine. Oil goes back down after the scare, and now it happens again. Now it's not one-off. Now it's starting to look like a pattern. Somebody, we don't know who, is doing something violent and dangerous to shipping in one of the world's most vital choke points in the flow of oil. So, that is, I'm not sure I'd call it an investable trend yet, but it is certainly something worth watching. And if it continues, I think it would be. And I have been out of the oil patch for some time, since I went independent. If that trend continues, I would start looking at making fresh speculations in the oil patch, because I think it's the sort of thing that would not blow over quickly, and there would be money to be made there.
What else might benefit from this uncertainty about Middle Eastern oil?
Clearly the so-called alternative energy, which I don't think of as alternative anymore, but really the new energy paradigm. But do I think people with cobalt or lithium or copper or silver projects are going to try to blow up oil ships to scare people out of the old energy paradigm? No, I don't think that. That's a bit extreme. And I wouldn't think that any of the state actors, you could say, oh, well, Chile has more copper than oil, so maybe Chile would try to blow up oil tankers to scare people out of the old energy pyramid. I don't, no, that's silly. That's not going to happen. They don't need to do that. It's happening anyway. And by the way, a lot of my readers, and I would guess a lot of your listeners, are the sort who don't like government subsidies and don't like the government pushing some politically correct agenda in energy or anything else. And I understand that, and I agree with those sentiments. But whether we like it or not, governments are doing it. And so, I get pushback sometimes from people when I talk about the new energy paradigm, and they say, oh, well, that's all this politically correct nonsense. We shouldn't be doing that. Well, maybe we shouldn't. And I would certainly have preferred to see the free market lead people to better energy solutions naturally. But that didn't happen, isn't happening. And as investors, as speculators, we need to deal with the facts in the market today. And the fact is that the world, rightly or wrongly, is being pushed into adopting these new energy methods, solutions, storage, generation, everything. And that's happening very quickly. I just read today that for the first time, and this isn't some politically correct, European country, but in the U.S., for the first time, the renewable power generation surpassed coal. That's huge for the U.S., which depended on coal for so long for its baseload energy. So very interesting times. No, I don't think there's any kind of subterfuge here between backers of different types of energy, but I do think there is money to be made making the right bets on the new energy paradigm, because some of the minerals required to make all that technology work are, in fact, in short supply, and we see increasing structural deficits going forward. Copper's one, cobalt is a little iffy in the immediate term, but cobalt is definitely another one, and nickel's another one, not lithium, not graphite. Those three, and I would also actually add silver, even though it's not often thought of as an energy metal. So interesting times, and I do think for savvy speculators who back the right trends here going forward, there's going to be a lot of money made.
Well, John Rubino pointed out that the price of solar has been going down 5 to 10% a year over the last 7 years. If you take a look at that, and if the trend continues, that might be a solid investment.
Absolutely. And whether I want to invest in the solar businesses themselves is a different question. As you say, prices are going down. Competition is fierce. You've got Tesla getting its posterior handed to it in that space. The Chinese cranking out huge amounts. So much that they're even cutting back their subsidies over there. So that's a difficult field. But what isn't so difficult to see is that all those panels, whoever's making them, whether it's the Chinese or Tesla or anybody else, they all contain silver, and the wiring used to hook them up is primarily copper. We use aluminum, actually, for high tension wires over long distances. But engine windings, most connections, near-term connections, are copper. So these are the winners. Whoever makes or loses money in the solar space, the metals that go into them are going to make fortunes for people who have them.
We'll have more with Lobo Tiggre right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, China has hinted it might use the rare earths play against the U.S. in the trade war. How important are rare earths? Are they that rare, and are they a big bargaining chip?
Let's parse that one bit at a time. Yeah. The rare earths are very important. They are critical in a number of different high-use applications. Your cell phone has rare earths in it. Those wind turbines that we're talking about just in the renewables, those have rare earths in there. High-performance magnets in your electric cars, or really all cars now these days have so much gadgets and gizmos on there. Rare earths are used in small quantities, but they're essential in a lot of these applications. So yes, they're important. However, they're not rare. China does control about more than 90% of the world's reserves here, but they are available somewhere else. So if China were to restrict access, we would see exploration heat up and we would see known deposits advanced elsewhere. It's exactly what happened 10 years ago when the same thing happened. If I had been prescient enough to see this coming and bet accordingly, I could have, and your readers, and my readers, your listeners, we could have doubled our money already. A lot of these stocks have popped, and they were so cheap. These rare earth stocks were, penny stocks. So if you go from a nickel to a dime, you're still basically a penny stock, but you've doubled. And some of these stocks have pretty much done that just on this hint, just on this rumor. I didn't bet on that. I didn't catch that. I'm not claiming credit for that. I'm saying that if you could have, that could have been an interesting trade. But now that the horse is out of the corral, as it were, it's dangerous. It's now news in the air. It's now perhaps priced in advance of anything actually happening. It's important that the word you used was hint. They didn't actually make a policy change. And they could easily decide to do something else, even bigger, slam some sort of major fine or ban on Apple in revenge for the Huawei ban. Might be a more direct approach than doing this. So if rare earths were, or the companies, the stocks, were still trading as cheap as they were before the hint, and we could see this coming now, I would be willing to speculate on that. If they're hinting and it's still cheap, then asymmetrical risk. If they don't do anything, nothing bad happens, we get out, we unwind the trade without pain. But since the stocks have already risen, there is downside now if China doesn't follow through on that threat. So it's not a speculation I'm making now. That said, if they actually do follow through and restrict supplies, the prices of those rare earths will likely respond, and the prices of those shares will likely, do so with gusto.
Is an important date concerning uranium coming up?
There's a leading question. Yes, we've discussed this before. The U.S. Department of Commerce's Section 232 investigation into U.S. dependency on foreign uranium. That report landed on the president's desk on April 14. He has 90 days to come out with a decision, which, as we speak, gives him a month and a day. So we're getting close to a deadline here. And, in some ways, I'm surprised Trump hasn't said anything yet. He's not really, he's unpredictable, but he's not really a procrastinator. So you could go either way with this. You could worry that the utilities are lobbying Trump not to do anything drastic on the uranium front because our good friends in Canada and Australia are strong allies and not going to interfere with the uranium supply. On the other hand, Trump is Mr. America first. So I have to say, whatever the lobbyists have to say, the idea of America depending so much on foreign uranium for 20% of its domestically generated electricity, just that seems like the sort of thing wouldn't sit well with Trump. So I can't promise this. It's not a trend I can say is happening. But my guess is that Trump will come out within the next month with something that will support the U.S. uranium industry. There are obvious winners in this space. I have several in my portfolio, and I'm hoping to get a very near-term gain on these stocks. And if I don't, well, I'm still bullish on uranium anyway, and I expect a longer-term gain on those same stocks.
Lobo, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.